Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to look at the preview of quarterly earnings of the very well-known CRM company, the Salesforce. Salesforce has been on tear, at least on the revenue count, for last couple of years, where the revenue growth has been strong for the company. But one thing which was creating some issues for the company was its cost of business, and now the company seems to be paying attention to that aspect as well. It has gone on cost reduction spree and has been trying to improve the margins, and this is the quarter where we will get to see if the company's strategies to reduce cost and improve margins is working or not. And we are expecting a double digit revenue growth for the second quarter of 2024, the financial year 2024. And the only thing which can go negative is if its cost of sales also rise, if the cost of revenue is also rising at a similar pace. But otherwise, we have a lot of positives going on for the company, both on the fundamental as well as on the technical side, and we can indeed look for investing in this growth story. The Salesforce is in customer relationship management business where it offers various cloud-based products to help other industrial houses connect better with the consumers and increase sales. Mm, and now the company is also joining the generative AI bandwagon. It has also released some of its products, some are in pipeline with the generative AI as its backbone, and this is the center at the company's current strategy with this lot of expectation riding on this ongoing AI wave. But that is something for another day. Today, we will be particularly focused on the company's financials, how the company is doing, and what to expect moving forward. And just for the overview of the company's business operation, I will also take you through these company's page to list its businesses. The company operates to fulfill the business needs of connecting better with the consumers. So these are the various services it offers to that end. There is a company's motto of bringing the companies and customers together, and these are major customers of the Salesforce. All right, now we go to its financials. This is the Salesforce announcement for the first quarter, that is quarter ended April 30, 2023. And why I am taking you through these prior report is because on the basis of these estimates, these actual earnings and the forward guidance provided at that point in time, we can set our expectations, and after gathering other data points, we can make our analysis of whether the company is likely to beat the estimates or not in the second quarter, of which the results are going to be announced next week. So we will have to look at the company's earnings for the first quarter. The first quarter was also solid in terms of the revenue growth, with its revenues rising 11% year on year and 13% in constant currency terms. The only issue which has pulled the share price low in last 2 years has been the cost of revenues, as I said in my introductory remarks as well. That has been a main concern for the investors, and also with many of its major customers, many corporate houses going for cost cutting measures. The products offered by Salesforce doesn't really remain priority for these customers, because in cost optimization environment, the value enhancing products offered by the Salesforce are not going to be the primary concerns for those respective companies. But now, with expected betterment in the operating environment, we can expect the ongoing sales growth to continue, the revenue growth to continue, and company is likely to need lower expenses, and it has also tried various measures like reducing the headcount and reducing the cost wherever possible. So with that, the company's earnings and its operating margin is likely to get better, and that is the analyst consensus estimate as well. If we look at the story of the 3 months ended April 30th, that is the first quarter of this financial year, there was strong revenue growth, with revenue rising more than 10 percentage point. The issue was of its higher cost. The total cost of revenue was also high, and as a result of that, the EPS is not really that good, and it is quite low in comparison to the EPS which the company was generating back in 2020 and 2021. The share price of the Salesforce was reaching towards $300 mark, but then it cratered towards $100 mark in the 2022. Now we have seen recovery, and the company is now trading close to $200 per share, and this fluctuation is also because the business environment has been challenging for the company, where it has needed to spend heavily on the product development, as well as to garner more customers. It has needed to spend money, and that has pushed its EPS lower. We will also consider its forward guidance provided at that point in time to see the company's expectations. With the company's quarterly announcement due next week, the shares are also likely to remain volatile. And if we consider operations, the operating results announced by its peers, the headwinds have been positive for most of the major tech players. So the consensus estimate is of the revenue beat and positive momentum. Let us look at its forward guidance. Where is the forward guidance? I will have to, I think, go on the lower side. No, it's not really there. Let us go back. Alright, here is the forward guidance. The revenue are expected to be in between US dollar 8.51 to 8.53 billion dollars, and year-on-year growth that is going to be around 10 percentage point. That's quite solid. The full year guidance is also with 10% revenue growth, with the cumulative revenues in the ballpark of US dollar 35 billion. The operating margin is expected to improve for the whole year with this margin improvement of 11% expected, and the EPS is also expected to improve with solid growth of around, because the EPS of the second quarter of 2023 was quite 23rd was quite low. So this EPS of around US dollar 0.8 is also good in comparative terms. The operating cash flows are expected to get better by around 15 percentage point, and these are the gap measures and non-gap measures reconciliation. All right. To gather a year-on-year outlook, let us also consider the Q2 results of way back in 2022. So these are the results for July 31st, the 3 months ended July 31st, 2022, where the revenue stood at US dollar 7.7 billion, with this cost of operations quite high, and as a result of that, the EPS income per share was low at US dollar 0.07 per share, and this was a lot lower in comparison to the EPS generated by the company in 2021. Now, in current year, the company is expecting the EPS of around $0.8 per share, so that is quite good. And this turnaround is happening because on both accounts, the revenue growth as well as on the side of cutting the cost, the company is seeing some success, and that has pulled the company back on the share price front as well as on the operating profit margin, and we are likely to see this ongoing wave continue, with most of the analysts pointing to the upside for the company in the second half of this financial year. These are the highlights of the company's financials, and you can access all this data on the investors relation page of the company. This is the disaggregation of revenue. These are the key product segments from where the company is deriving its revenues: sales, services, platforms, and other. And the growth momentum varies in these segments. Somewhere it is performing exceptionally, somewhere not so. And this is the breakup of the revenue by region, where the EMEA is the highest contributing region with 39% contribution, Americas contributing 21%, and APAC, the Asia Pacific, 32%. So the main region, the market focus has been on European region for the company, and that is where its major share of revenues is coming from. Now we jump to the technical side of the story, as we have seen that the company's fundamentals are favorable for ongoing growth. And if we look at the company's share price, it has risen substantially from where it was 5 years back, and in these 2020 we saw the company's share price more than doubling from this low of March to the high in September. And after that, the things went sideways after establishing this high at 312. The company share price nosedived and it went back quite close to this low of March 2020, and from there on it has bounced back, and now again it's an interesting story to see how things pan out for the company. And my expectation is that this ongoing rally is likely to persist in the second half of this year as well, with some room for correction. Of course, that can't be ruled out after this strong rally, where the company share price has almost doubled from this low to this high, and some reason is quite possible, but overall the picture remains solid for the company, and we can continue targeting for more investment whenever the opportunities arises and you feel that the whole environment is positive and we have good headwinds. We can go for the initiation of new investments in the company shares. So the key level to watch out for is going to be this consolidation phase, where the company spent significant amount of time consolidating close to the US dollar 190 level, and that is where I think the next support lies, because this is the area where it spent the time before rallying higher again, and if the company holds around this price band this time as well, eventually it will start to climb back again, with the possibility of this high likely to be breached. So with that possibility in mind, all we have to do is look for favorable risk reward ratio, because any trade can go wrong, and given that possibility, we do have to make sure that in the eventuality of we being on the wrong side, and share price doesn't really performing as per our expectation, we shouldn't be losing too much money. And to make sure that is the case, we do have to look for the regions where there are key technical supports, and if that is breached, we get a idea of the change in momentum and get out of the trade with minimum possible loss. Given this kind of execution, we will have better profitability overall, and even if we getting our expectations, we getting our analysis wrong, will not really cause too much harm to us. So factor in all these aspects and try to figure out the optimum risk reward, and these are the key levels to watch out for in next couple of weeks, and particularly in the next week, where the company's share price is likely to remain quite volatile, with the possibility of major jumps on either side depending on the kind of revenues and operating profit the company shows in its financial reports. So stay tuned for its financial results, which are going to be announced next week, with consensus estimates pointing northward. We can take our chances. If you think about going in for a free release trade, you can think about that as well. And if you don't really want to jump the gun, maybe, then in that case, you can even think about waiting it out, and after the earnings are announced and the initial price move stabilize, making a new assessment and deciding to trade given the initial reaction of the company share price to the announcement. You will also stand in a good position to go for money making trade. The probability will also be quite favorable. So both ways you can think about trying to benefit from the announcement which is likely to cause sharp moves in the share price of the company. So that's all from my side for today's session. If you have any query or any feedback, you can write to me and I will be happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around on Monday. Goodbye.